So what are we talking about? Well, frankly, what we're saying is the following. Let's find out first of all what can potentially cause a stock market bubble. That is very important. Why? Well, because once they start, they can be quite expensive, as we've seen it in the past. Okay. So that's the first thing we need to do. So let's find out exactly what is going on. The first thing we need to know is what is actually driving this whole charade. What's driving the stock market, right? What causes crash? What's going on with the money supply? What is Buffett thinking about this whole thing? Does he think that, are we overvalued? Are we undervalued? What about AI? What is AI? What does that mean? How is that compared to what we experience with the dot-com bubble? Are we more concerned about missing out or making out? So these are the questions that we need to ask ourselves. Are we overvalued? And what causes stock market crashes? What is the big deal? What's going on? What do we have? And overall, the growth of the global money supply. So first of all, let's find out, what causes stock market crashes. Because right now, believe it or not, this is a discussion that's actually very timely for Sunday discussion because the market is doing very well. I'm sure if you have money in the stock market, you're doing pretty good, right? Everything seems to be doing great. The thing is, well, how long is that going to last? Wouldn't you like to know? Overall, what's going on is you have what we call an AI boom. And is this sounding a lot like the dot-com bubble that we all experienced in 2000, right? So, and at the end of the day, what causes stock market crash? What causes it? What's created? How does it start? Well, I'm going to give you 7 points. I'm going to make 7 points today. The first one being, what is the role of the money supply? Now, you may not be aware of what the money supply is and what it means, but basically it has a huge importance. And this is what this channel is about, is really explaining to you what's going on in this economy, but more importantly, how is it going to impact you and the stock market and potentially your job? You need to know these things. Now, of course, lots of information is available. Everyone tells you about everything that's happening. So you're getting news, but you need analysis. And analysis is not something that comes very handy. Why? Well, it doesn't come handy because you need to choose sides. And yeah, you have to say things that are reasonable. I mean, based on my experience, this is what I think is going on. We need to take a look at the role of the money supply. How much money is in the system right now? And who controls that money? Who controls how much money goes into the system? I'm not talking about the stock market. I mean, the money supply itself, which is basically the job of the Federal Reserve, okay? And what causes stock market crash? That's going to be my second point. Then I'm going to talk to you about the fact that a lot of people, it's not so much that they are fear of risk, it's the fear of missing out. I don't want to miss out on that money. The market is up. The market is up a lot. A company like NVIDIA is up 100% in not so long. I could have made money here. I'm missing out. I don't want to miss out. Then number 5, I'm going to talk to you about whether or not this whole thing is overvalued. I mean, are you paying too much or not? And number 6, I'm going to say, well, what should you do? What advice do I have right now? What should people do? So let's talk about it. First of all, I think that you need to understand what the money supply is, because it's important for you to understand what that is about. And you need to realize that the money supply basically it's important. It's important because it is the amount of money that's in the system. And the amount that's in the system is basically managed by the Federal Reserve. which is the central bank in the U.S., and they decide how much money is in the system. How do they do that? Well, I mean, they have open market operation. They could set the rates. That rates that we all want to go down further and further, because the less it is, the more money there is. The reserve requirement, whether or not they're going to be buying back treasuries. Do they want to reduce? AI is the third most important invention after electricity and the internet. Well, that's very important to say that. Foreign wine. Why? It's important for you to say that because everyone right now is trying to figure out what is it with the AI. Because remember, you may not remember, but 20 years ago, there was a dot-com boom. Everybody wanted to create a website, and they thought, my God, this is fantastic. We could do all these things. We could manage money. We could download. We could look. We could search. We could do lots of things we couldn't do before. So this is fantastic. And to the point where the market went up and up and up and up. And if you take a look at the P/E ratio, it reaches level of 37, 38. And we are now at that level. So the question is, and this is the main question, is this like the dot-com bubble? Is it all going to disappear? Well, I mean, we're still using the dot-com, right? As you know, you're probably accessing it right now. I'm talking economics. Yes, I'm talking. Well, this is going to be a topic. This is going to be a very interesting discussion because it's going to be economics, right? It's going to be about stock market, and it's going to be okay. But what's feeding all this thing, right? And you mentioned a very good point, which is, what is the AI, artificial intelligence, and artificial intelligence is in cars or like a Tesla, right? Without it, you couldn't be driving anywhere. It's in the ChatGPT, right? I mean, ChatGPT, literally, you could have a conversation with ChatGPT. You could say, listen, generate a picture of myself holding a glass, and here's a picture of myself, and I'll take it, and I'll make a picture of you holding a flower. I'll do a bunch of different things. Tell me what I should say on my first date. And what if she says that? What should I say? And if she said that, what should I say? You could literally have a conversation, because this is what AI is about. You're basically having a conversation with someone else. It's as opposed to Google, where you say, what's the best restaurant in the area? With AI, you could literally start talking to this thing. And of course, ChatGPT is doing great. And for them to be able to do that in such a very fast time, they need to access lots of information in a very, very, very fast-paced way. And of course, ChatGPT is one thing, but you also have Gemini, which is a Google, or even Grok from Tesla. Everyone is getting into it. AI is fantastic, and is only going to get better and better. That's what they said about dot-com bubble. But the question that we have today is this. Is it too much? Are we paying too much for it? Do we really understand it? And that's the problem. Because you don't understand it, and that's the point that I'm trying to make, which is, my point number 3, which is, are we missing out on something? Because maybe it's more important. I mean, the stock market is going up. You might like Trump, you might not like Trump, you might like what he does or what he doesn't do. But right now, the market is going up. And why is it going up? No, what is a market after all? And this is why I think you need to understand what the money supply. And right now, my friends, the money supply, coincidentally, it's at its highest level. There's a lot of money in the system. And the money's got to find a home, right? It's got to go somewhere. It needs to find a way, right? This cash that's running around. And what's going on is basically going, and potentially some people are saying that's why the market is so high, because there's so much money. And then on top of that, you're about to reduce the rates. So you're not going to take that money and buy CDs or buy money market when the rates are going to drop and drop. Right now, the 10-year is at like 4.3%. So it's going to drop and drop and drop and drop, because that's what Trump wants. And we'll talk about this, about the reason why should rates be higher or late at a later date. But right now is, rates are going to go down. They're going to probably going to the Fed chair is probably going to leave. He's probably going to leave to allow for the rates to go down. And we'll talk about that again later this week. But the point is, right now, you should know, okay, that the most famous, the most influential economist of the 20th century, Milton Friedman, do you know what he said? He was a leader in monetary school, and he believed that money supply is the key driver of economic activity. Well, it's like having a bunch of kids that are playing in a room, right? If you don't give them toys, they're not going to play. But if you give them toys, then they are going to play. And that's basically what's happening. Lots and lots of toy in the room. Lots and lots of toys. And then they're going to bring cookies, meaning that, for example, we're going to lower the rates. We're going to have money supply. So the environment is flush with cash. And on top of that, you've got this thing called AI, which people are saying, well, that's a great toy. I want to play with that toy. Everybody wants to play with that toy. I say, well, take your time. Here's some food. Here's some more toy. And you can spend all afternoon playing. And it's going to be fantastic. But is it too much? AI is fantastic, 4-in-1. Yes, AI is indeed fantastic. And basically what Friedman said was, you know what? What the Fed should be doing is essentially, the Fed shouldn't be doing much of anything. It should definitely not set rates. What the Fed should do is basically pump the money when it's needed and take it out when it's not needed. That's all. In fact, the Friedman was critical of the Fed handling of the Great Depression. The Fed, believe it or not, caused the Great Depression. I'm going to talk a little bit about poor Powell, but frankly, the Fed hasn't been doing such a great job. And you may understand the Fed, you may not understand the Fed, but it has a huge impact on your daily life because for example, during the Great Depression, they caused the Great Depression by keeping the money supply from flushing out. Okay. According to him, unpredictable Fed intervention when destabilize the economy instead of stabilizing it. He was very critical of the Fed, the same way Trump is very critical of the Fed. You may agree with him, we may not agree, but some people have disagreed with the Fed before. In fact, some people right now are calling for Powell to leave. I mean, the building is one thing, but there's a bunch of other things that's going on at the Fed that people don't like. And especially if he's not going to reduce the rates very soon. And we're talking end of July. So basically what Friedman was saying, again, the most famous of all influential economist, okay? According to him, unpredictable Fed intervention often destabilizes the economy. Okay, so we have established that there is a lot of money in the system. There are lots of toys in that room for everyone to play with. And the biggest toy of them all is AI. What is it? What does it do? Wow, this is a shiny thing. Let's buy some more of it. Let's talk about where we are in terms of, well, maybe we have too many toys to play with. Is the stock market overvalued? Well, I will tell you, Barclays, for example, has what it called the equity euphoria indicator. And basically, they're saying that this thing has surged to twice its normal level in territory associated in the past with asset bubbles. We might have a bubble, and I don't want to remind you. Let's talk about that bubble that happened in the 2000. That could hurt a lot. But for example, the losses that were taken, which began in March 2000, for example, in the UK lost in real terms 49% of the value of the stock market, went down by 49% until October 2006. It took until October 2006 to recoup that money. And then, of course, as we remember, 2007 was right around the corner, and we lost another 47%. So be careful. Be careful. This is real money we're talking, especially, you may not understand everything that I'm really talking about, and I'm trying to put it in simple terms, but keep in mind that if retirement is around the corner, it just doesn't mean this thing is going to go on forever. It could stop. And based on valuation right now, it would appear that valuation are at all-time high. That's one thing. Another overvaluation, I'm talking about the valuation for Barclay. Let's talk about the S&P right now. Is now valued by investors at more than 3.3 times their sales, according to Bloomberg data. That is an all-time high. The P ratio is very high. So basically, we're overvalued, and frankly, we should look at what Warren Buffett, applying the yardstick that investment sage Warren Buffett regards as the best single measure of market valuation. It's called the stock market capitalization relative to the GDP. And according to him, we're at historical record level. So, my friends, and don't forget to subscribe to the channel because I'm going to be talking all week about very important topics. I mean, what I'm looking for, I'm not giving you news, and I'm really trying to explain to you the risks involved in everything that's happening around us right now. And trust me, there are lots of them. And obviously the most important one for your money. I mean, just listen to me, even if you may not understand everything that I'm talking about. But I want you to really grasp the idea that at the end of the day, what we're doing is we're trying to see whether or not this market is overvalued and or not. And based on many valuation that we have been looking, we are overvalued. But what does that mean, overvalued? It means, well, based on information that we've seen, the market. But keep in mind that what causes market crashes, okay, are not overvaluation. Well, just because it's overvalued, well, because then otherwise the market would never go up, right? Because, well, the market is overvalued. Well, yeah, but I mean, give it time to recoup, and it keeps going higher and higher and higher. I mean, that just people are willing to pay more for it. The same way you've been paying for a car more and more every year. Doesn't mean that you shouldn't be buying cars anymore. What you need to worry about is when you have overvaluation and a combination of events. What could cause a crash? Well, economic shocks, recessions, high inflation, sharp interest rate hikes. That could cause a problem. Financial system stress, excessive leverage, asset bubbles, liquidity crisis. That's what happened in 2008. I remember I was there. There was no liquidity. You could not get money out of the bank. Amazing. Speaking of money out of the bank, I just want to remind you, if some of you that think that, well, the Fed is doing a great job, leave him alone. Let's remember that, I believe, was it last year or the year before? Remember what happened with the California banks that the Fed didn't pay attention to, right? And they were able to have a huge amount of asset liability, and they had to basically close those banks and SVB, remember SVB? And they had to, something happened there, right? The Fed wasn't watching the store at all. But then again, I was there in 2008. The Fed was not watching the store in 2008 either. So let's not be too keen on saying, well, you know, Trump is picking on Powell, so leave Powell alone. He might have a point in terms of Powell needing to do something, get out, or be more monitor or something. I'm a little bit concerned about that. But the point is this. Financial system, geopolitical or external shocks, war, conflicts. I mean, that's one of my risks. Israel, Iran, right? Ukraine and Russia, China and Taiwan. Number 4, policy and central bank actions, monetary tightening, fiscal shocks. These things could actually have impact the stock market. Basically, if the top is shaking and you start shaking the bottom, that's going to be a problem. Market sentiment and psychology, which is what we're talking about right now. If everyone thinks it is overvalued, then it is overvalued. Therefore, you should sell. Structural issue. Poor governance or algorithmic trading. For example, 1929, the stock market bubble burst. Basically, it was economic slowdown, bank failure, and stock bubble. 1987, remember that one, 1987, where the market dropped by 20% in one day? Portfolio insurance and automated trading triggered a sudden global crash. 2000, 2002, the dot-com bubble. What caused the dot-com bubble? What the heck happened? Well, it was due to unstable take valuation. There was it was just too damn expensive. I say, come on, it's too much. It's too much. I mean, the P ratio was such a high, and everybody with the dot-com would just Value it. I am investing my life saving in my space because of their recent integration of AI in the social media space. I don't know. Well, let's talk about where you should put your money and trying to get bets, because I will tell you right now from personal experience, no one knows what drives the stock market. No one knows. If people tell you buy this stock, buy that stock, please don't listen to them. Don't listen to them. Why? Because if they knew, they wouldn't be talking to you. They'd be doing it for themselves. No one knows. You could make recommendation, like for example, I'm telling you right now on my Patreon channel. You know what, guys? Take a look at what is this called? Idaho Resources, or take a look at some AI stocks, rare mineral stocks, and gold stocks, and things like that. You may know what a rare mineral is, but you should find out. There's some opportunities there. But I'm also saying, well, let's buy some stocks so that when the market crash, we don't lose 50%. Maybe we only lose 10 and 20, and buy undervalued stocks. Don't go after NVIDIA. You're asking for trouble there. So basically, structural. 2008 was a housing bubble, subprime mortgage crisis, Lehman Brothers collapse. 2020 was COVID. Right. So basically, when the market crash comes, and it's coming, because why is it coming? Well, because there are many of these things that have called crashes in the past are there. It's just no one has taken over. You know, you've got the dollar, you've got inflation, you've got rates, you've got you got Russia. You know, you got all these geopolitical risks that are running all over the place. Everybody's pissed at everyone else. And then Trump is in the middle doing his thing, and it's creating uncertainty, uncertainty about the Fed. What is the Fed going to do? I mean, are we going to have a Fed? Is he going to leave? You don't want to shake. Trump is on it with Powell, and you just don't listen to people telling us to buy stocks and tell us to buy something in the same breath. Well, no, I didn't. I'm not recommending stocks. What I'm saying is this is about: are we facing a potential crash coming up, and what to look for it? On my Patreon channel, I recommend stocks, a position that's important. But the thing is, but you have to be invested. Because another element that I have is number 3, which is a fear factor, right? Because a lot of people don't want to miss out. Don't forget, people have been saying for like 2 years now, the economy is going to crash. The economy is going to crash. The economy is going to crash. The economy hasn't crashed yet. Maybe AI will produce enough information to keep everybody busy. You get a different kind of job, but everybody makes money. So it is a bit different. Consumers don't have any disposable income. This is a main issue. Well, it depends. Well, there's a lot of money in the system, okay? Meaning that not free money, but the environment is flush with cash. I think there's about $20 trillion. That's the highest it has been. And some people are basically saying, I'm not a big believer in it, but you need to follow. Do you really know who owns America? Oh boy, that's a big question. The thing that you have to worry about is this. You need to worry to make sure that we're not overvalued. Well, we are overvalued. It's up there. It's high. It's not low, it's high. That's why I would think if you want to invest, maybe what you should do is take a look at undervalued stocks. And there's lots of them. Right now, the big topic, it's coming, you may want to get on it before it's too late, is, take a look at undervalued, meaning low cap, small cap stocks are not doing well at all. In fact, they're down for the year. So that's what you should be looking at if you're going to buy stocks. I'm not saying that they're not going to go down when there's a crash, because unfortunately, when there's a crash, and that makes it very difficult to predict everything, all of these stocks are tied. It's like chaos theory, right? You think that everybody is independent doing its own thing. No, when the market crash, everyone crash at the same time. So how could you predict anything in this fashion? You can't. You can't say, well, my company is doing fantastic. Why did I lose 50%? Because there was no liquidity in the market. And this is why you need to look for these points in the signals, right? So basically what we're saying is the market is overvalued. That everybody agrees. It doesn't matter where you look, okay? Investors are the fruit at harvest time. Exactly. This is harvest time right now. It's time to harvest, right? Pick the fruits. Pick the fruits from the forest. Don't let it spoil. But now there's so many fruits, not everybody will be able to pick it up. At some point, they're going to start rotting. And that's the issue. When there are too many fruits on the ground and nobody's picking them up. And are we there yet? Well, it depends. Because now we may say that, AI is very different from .com. AI is an actual product. AI has a lot of potential. And after all, I mean, don't forget, you have ChatGPT, okay? Now you have Gemini, okay? You have Grok, okay? You got a bunch of others. But frankly, aren't they all doing the same thing? Right? They're basically doing the same thing. Maybe like ChatGPT came up something new that's going to be a little more efficient or whatever. But they're all going after the same thing. And they're spending a tremendous amount of money. And this is what you have to be careful because they're going to be losers. So if you're going with Google and Google, remember, Google used to compete with Yahoo. Remember Yahoo? Where's Yahoo now? Yahoo's gone. Okay? Why? Because Google did it better. But then, can we have Yahoo and Google? Do we have to lose? Well, unfortunately, now they're going after the same piece. And this is what worries me a little bit. What worries me a little bit is that we might be overdoing it and we might not really understand. Do you actually understand AI? Do you understand how that works? Do you know the power that is needed? The power that is needed in order to generate that amount of information and that speed. You're having a conversation, not just you. Everyone on the planet is having conversation with AI and talking and back and forth more and more and more and more. And the more people talk, the more power we need. I mean, let's not talk about the power that is needed to generate the data centers that are needed to generate all this. It's huge, huge. You have no idea. I mean, the thing with Bitcoin, like the digging of Bitcoin and trying to find out what's going on with Bitcoin is hard enough. This is even more. So therefore, these are the points that I think that you need to understand. 6 points. You need to follow the money supply. You need to understand what causes market crashes. You need to understand that right now everybody is fearful, right? They're fearful that they're going to miss out. Number 4, what is AI really? What's going on there? Why is it so important? Number 5, are we overvalued or not? That's the question. And number 6, which is my final point here, what should we do in this situation? Okay, fine. I don't understand AI. I don't care. I don't have money in the stock market. What does that have to do with me? Well, my friends, it has a lot to do with you too. Because if tomorrow AI takes over, right? And it could take many formats, right? It could be that, you know what? We don't really need teachers and professors, right? I mean, look at it this way. Currently, you could go on YouTube and, you could see other classes being taught, and you could, and frankly, you could go on AI right now and say, can you generate for me a course on security analysis, or can you give me a course on AI? And that thing will generate a course. Can you generate a resume for me? And I'll do that for you too. So maybe I don't need to be taught anything because I could just, can you tell it to me instead of me having to read it? And it will talk to you. I mean, maybe you haven't seen it, and probably why it's not really impacting you. And I know I was in that camp too. I said, AI, please. I only started looking at it like maybe 3 or 4 months ago. I mean, I heard AI. I figured it was Google. What's the best restaurant around? That's what I was saying. And then I realized, no. Somebody told me, no, you don't understand. The thing with AI is that you could have a conversation with it. AI is more like the NFT bubble, worthless. What is a bubble, right? What is a bubble? A bubble is something that gets so big it bursts. while it's getting larger and larger and bigger, you're making money. But at some point, it bursts. And the thing is, you need to worry about this. The great thing about AI is that it will destroy the credibility of anything seen on the internet. That's not wrong, actually, because AI actually is able to rationalize and analyze, and which is what we're doing on this channel. We're trying to analyze and rationalize and understand what's really happening, not just reporting information and being, the economy is going to crash. Oh, this bad is going to happen. Look at me, give me some views. No, it's all about understanding what's really happening. But I will tell you, philosophically speaking, there's one thing that you need to understand, is the fact that you need to realize, as the first philosopher always said, and what he said was this. He said that I know that I don't know. Did you know that Musk is a flunky for Peter Thiel? No comment there. I know Peter, but no comment. But basically what we're saying is that, these things can happen. And basically what you need to know, and it would help you in your daily life, it helps me, is you should say basically what the most famous philosopher ever, Socrates, the first one, he basically says, I get up every morning and I know that I don't know anything. You need to know that. You need to know that you don't know anything. You need to know that Monday morning it's going to come around. We could have a crash. Well, how did that happen? They're going to tell you we were overvalued. The thing is, what I'm trying to get my subscriber to do is not to get caught when it happens. I want you to know what's going to happen before it does, or at least know that you are not going to be able to predict anything. So what does that mean? So you should be invested. So you should really get into the stock market, but it's not really, and you should be diversified, because at the end of the day, what am I supposed to do here, right? Well, what you're supposed to do is you need to diversify your portfolio, because you're probably overvalued. And what I mean by that is because if you believe, and some people do believe, that the money supply is pushing the stock market up, it's artificially maintained. And the money supply, where do we get the money from? Right? Where's the money coming from? Well, the Fed. Where does the Fed come up with the money? Well, they just print more money. And this is where the Bitcoin thing is important and the gold thing is important, because you can't make any more of it. There's only 16 million shares for Bitcoin, or 13 million. I think it's 16 million. I forgot. But the point is that there is a finite amount. There's a finite amount of gold. You can't make any more gold. So you know that it doesn't lose its value. And where do you think gold and Bitcoin have been going up? I mean, Bitcoin is up $120,000. That was $2 at one point. Okay? So the more this thing goes up, the more it becomes important, the more it becomes an issue. Now, why is this becoming an issue? Why is it becoming an issue right now? Because the Fed, Powell, is under attack. He's under attack because he wants to keep the rates higher. Well, at least he doesn't want to lower them. And that could be a structural issue. That could be the cause of a stock market crash. Why? Because by him, of course, you're going to say, well, he's going to be gone by May. Yeah. But if the guy that replaces him keeps on keeping the rates the way they are because of inflation, then you have a problem. Then the market is going to say, but I thought we were going to get the rate decrease. I'm not getting decrease at all. This is not happening. This is not good. I need rate decrease. And because I didn't get them, then I'm going to crash. Like I said before, these are the reason what caused the stock market. I'll give you 6 reasons what causes. And then you get to pick. You get to pick which one you think is adaptable in the environment that we're in. The first one is economic shocks. Recession, we don't have one. High inflation, I don't know. Sharp interest rates, sharp interest rate hikes. That's not going to happen. Aggressive monetary tightening. Although, if you have high inflation, as a lot of people that don't like Trump keep saying, inflation is coming, inflation is coming, inflation is coming, then the Fed is going to have to hike the rates. That could cause a stock market crash. So, my friend, I want you to watch this. Watch carefully. This is why it's important for you to understand inflation. You cannot care about inflation, although you should see the price, going up in your refrigerator. But if that happens, then you're going to see a huge potential crash because don't forget, we are overvalued. Did they know Trump, Vince, Musk, thieves are connected? Well, they all have money, so that's how they're connected. But I will say that Trump and Vince, JD Vance and Trump haven't gotten along very well recently. And you know why? This is because what happened with the Israeli-Iranian thing, right? When the U.S. Bomb Iran, Trump basically said, "That's it, we're done, and everything is taken care of." But then Vance said, "Trump is in the Epstein files." That's another big topic right there. Basically, what Vince said is, no, JD said, no, I don't think we destroy everything. Look, there's this report from the CIA that just came out, blah, blah, blah. And Trump said, what do you have to bring this up for? This was not supposed to be released to begin with, and he was out for a while. That happens to the national advisor as well. She came out recently with something new against Obama, so that was very helpful for her, although she came out a little bit hesitant. But the point is they were both out. So be careful. As far as the Epstein file, you have to be very careful. Right now, you have to be extremely careful because that file is going to be a problem for someone. Because it's hard to believe that no one is actually guilty of anything in this case. How could that be? Right? I mean, come on. And someone had to do something and didn't get caught because one died and the other one is in jail and she wants to get out. And frankly, how do you believe anything she's going to say? Of course, if you don't like Trump, you're going to say, well, I'm sure she'll. But if you like Trump, you're going to say, well, this is ridiculous. The point is, it doesn't matter if you don't like it. She is going to talk. And Trump is heavily reliant on the MAGA movement. And this is what I mean by what we would call policy or central bank action, but policy or market sentiment. This would fall under, speculation, monetary. This could fall under, panic selling, basically, because if tomorrow, I imagine that something comes out, a name is mentioned, the MAGA people get pissed, Trump loses its control, other countries see it, they say, you know what we're going to do? We are going to raise the tariffs against the U.S. because Trump is now weak, we could do it. Because that's what they're doing, they're poking, they're checking, and this is what Trump is trying to tell everyone. Leave me alone, let me do this thing, because if you're weakening me, I cannot do what I need to do. Now, is it the right thing to do? Is it a bad thing to do? That's a different topic altogether. But they are trying. Do you know Maxwell? Yes, I remember his father. Her father, believe it or not, Robert Maxwell, used to own a company called BAT Industries, which is a tobacco company in the UK. And then, of course, it kind of went away. And he died very mysteriously on a boat. And they found out later on that he was a Mossad agent from Israel. I don't know what the heck was going on there. But, he stole pension. He was not a good guy, I agree. Terrible time is correct. So the family itself is a bit icky, right? I mean, these are not the greatest, warmest, most lovable people in the world. Well, but then again, neither was Epstein. And what was he up to? He was a hedge fund manager. I don't remember a hedge fund he was responsible for. No, he would manage money for other people. Like he would manage literally the money of the guy that used to own the Limited. Remember the Limited? Right? In fact, I used to go to San Juan and they had this huge boat of his in the marina. And Epstein was in charge of his money, power of attorney until the whole thing came out. He was a very, very, very good friend of Epstein. And so was Bill Clinton and all these people. I mean, and then of course you've got Trump running around amongst them, but not just him, a bunch of other rich people, right? So does it mean that they were involved? Well, you don't know, but the point is it's unfortunate. And this is not something that is needed right now. This could be the clinch of a huge downturn, right? Depending on what she says, and I'll do a video later on this week because new information that are coming out. But because we want to see what happened with Blanche, who the assistant the district attorney, who went to see her. By the way, the attorney general is. Have you seen her recently? She's in the hospital right now. I don't know. Something is going on there as well. It's very coincidental. The point is, going back to the stock market crash and the AI boom versus the dot-com bubble, there's several items that could happen that could create a downturn. 7 items: economic shocks, financial system stress, liquidity crisis. I don't think we have a liquidity crisis right now. There's a lot, like I said, the money supply is very, very strong. I said bubble bursting. Well, that could be because everything is valued a lot. Geopolitical and external shocks. That's what falls under that category. I don't know. Tomorrow morning you go to work or you get up and China has just invaded Taiwan. You could bet you're gonna have a crash. Why? Because that's a geopolitical risk. That just policy or central bank action, monetary tightening, rapid interest rates hikes. We're looking what's happening. Can you be a little bit pregnant? No, you can't be. And right now we're saying, well, I'm a little bit pregnant. I feel the market is overvalued, but frankly, AI is going to be doing great, and Trump is going to lower the rates, and tariffs are going to be fantastic. So, okay, all these things cannot come out right. That's impossible. Market sentiment and psychology, panic selling, herd behavior, speculation. Right now, there's a fear, and there was an article that came out not too long ago, there's a fear of missing out. Midrid, how you doing? There's a fear of missing out. Missing out what? Missing out on the AI bubble. So there was an article in the Financial Times. Trump, you're so silly. Well, I don't know if he's silly. I think he's very nice, Will. You've read the article. FOMO, yes. Pretty good. FOMO, meaning fear of missing out. Will Burge reads the Financial Times. I mean, the information that I'm giving you is not is actual, real, knowledge. And I want to educate my subscribers as much as possible here. Not that I know everything, but I think I could put everything together for you and say, okay, these are the things. These are the things. You need to understand what's happening, and then you need to decide whether or not you are for or against it. And right now, structural issue. Do we have structural issue? Do we have poor corporate governance or fraud? No, like Lehman Brothers. Remember Lehman Brothers? I was there when they kick all these people out in the streets. I said, what are these people doing with those boxes on 45th Street and Broadway? What are they doing? They are out. Or Enron, right? That could be, Enron was 2001. Okay, 2001. Lehman Brothers, 2008. Financial crisis, Lehman Brothers. Poor corporate governance. And this is why you have to be careful. Trump right now is poking at the Fed, and Bassett is poking also, and they're saying, what are you doing in the building? 2.2, 2.7, 3.1. You're poking. Yeah, his mentor was quite someone. Terrible time. You're right. We'll talk about him in a second. But you're poking at this guy back and forth, and he himself is actually hired someone to check the building. But I will tell you, I've been living in New York for quite some time. You get into the real estate business, there's always crooked things happening. There is no way that this business was squeaky clean, and Trump knows it. I'm sure if he looks hard enough, somebody got paid off. Somebody got paid off to make the building, to this. There's some corruption here somewhere. And I believe, and I'll talk about this later this week, but someone is actually the Fed, Powell himself hired a lawyer to double check to see, okay, everything okay in there, because I don't want any trouble with the law or anything like that, because it looks like we spending too much, and where's the money going, and it's confusing. But this is what I mean by policy or central bank action. Right? If the Fed appears to be weakened, right? If the Fed appears to be weakened, that's going to be a problem. Because then, so some people are actually calling for Powell to resign. Because first of all, he made a couple of mistakes, as the Fed has always done in the past. And let me remind you, of course, that the most famous economist in the world, the most influential, which is Milton Friedman, you could watch him on YouTube. He didn't believe in the Fed at all. He believed that the Fed should only be doing one thing: increase the money supply and pull back on the supply. That's what you should be doing. You shouldn't be setting rates. You shouldn't be doing all these things. And frankly, we've seen what happened in 2008. They missed the boat completely. In fact, they missed the boat recently as far as the rate. And maybe right now they're missing the boat that instead of lowering the rate, they keep the rates they are. You could be causing a recession for that matter because the rates are too high. And this is what I mean by the risk that makes stock market crashes. It's six reasons: economics crashes, financial system crash, geopolitical, policy, market sentiment, structural issues. We've got them all right now in our hands, except maybe structural issues like algorithmic trading and poor corporate governance. Apologies for all this interruption, technical interruption. But the idea basically is we have all the elements for a potential crash. But, okay, great, thank you. But frankly, the elements are there, but they were there yesterday and the day before. It's just that you don't have the clinching element that's going to make them crash. So you have the elements there, and you have the fact that everything is overvalued there. What some could say is that we're just waiting for the spark. And while we're waiting for the spark, the market is going up and up and up. And making even more overvalued. Now, of course, when we say overvalued, we're talking like P ratios and sales. Now, of course, if the AI thing comes through and it actually does work, then what's going to happen is those valuations are going to drop and drop and drop, which is good. So then you're not so overvalued after all. But if it doesn't work, and unfortunately, and these are what I want you to be on this channel, because I am constantly monitoring, those 9 or 10 items, the Trump the economy, the stock market, the dollar, the tariffs, what we're doing to Powell or not doing to him, Israel, China, the inflation, Russia, and now, of course, there is the Trump administration in turmoil, meaning the whole thing that's happening with that girl, Ghislaine Maxwell. You have lots of elements, lots of risks up and down. And didn't Milton Friedman manipulate currency as a test run for what's coming now? Well, I don't know about that, but I do know that he was not the biggest fan of the Fed. And at the end of the day, you may or may not understand economics, but you should realize that don't rely too much on the Fed. Don't think, and don't think just because you don't like Trump that he's wrong what he's doing with the Fed, because the Fed has been wrong in the past. In fact, the Fed himself admitted. And in fact, recently, Al Harayam, the president over at school in England, said it himself on CNBC that he thinks that the Fed should resign. And I say, what? Why? Why are you saying that? Why are you saying you want the Fed to resign? Why? Because Trump wants him? And again, everybody is being relayed everything to Trump, and you're getting confused. And CNBC, no, it's not Bloomberg. They're not totally against Trump. But he was saying, why? And you should see that discussion, because King's College, right? He's the president of King's College. and he said, and he used to manage a huge fund on Wall Street at one point. And he's saying, yeah, I think because he's being investigated right now. Right now, Powell is being investigated. He's being investigated, not himself, but the Fed. The building is one thing, but there may have been some insider trading. He's also being investigated for what he said regarding the Trump tariffs. That we don't know what's going to happen. Therefore, I'm not doing anything. Um, I don't know about all these stories. Um, I do know that the U.S. did a lot of terrible thing in South America because they were fighting communism. I mean, could get into that topic, but frankly, if that's what you're referring to, it was pretty bad what they did in Chile, in a lot of countries. Why did the U.S. do that through Kissinger? Because they wanted to fight communism. They did not want the thing that happened to Cuba to happen again in South America. I mean, you're complaining about Putin, what he did in Ukraine, everything else, but he told them, he said, you're getting too close. NATO is getting too close to Russia. The same way the U.S. didn't like when Cuba fighting communism. Yeah, that's what they were doing. The U.S. has been fighting communists in Cuba in '60s, right? And they did a tremendous amount of damage to these countries because they wanted to destabilize them, right? So that they would not be able to be strong enough to bring communism in South America. It was always, they would basically pay people to do all kind of things. Like they literally killed the president of Chile, freely elected president to create chaos because we did not want the U.S. did not want Russia literally in its doorsteps. Look what happened with Weinstein fascism. Read it. In fact, you should read. There was an author that wrote a very interesting book on Kissinger that really should have been trialed. I forgot the name of the author. A very, very good book. If I remember, I'll let you know. But basically, explains to you exactly what happened down there, and it wasn't a pretty picture. And that's why you could understand why a guy like Putin said, you know what, I don't want it. I don't want these people next to me. Okay, you know what, I'm invading them because now at least I am able to push them back. So all these might make sense to a certain extent. Some of them, yeah, I think so. That's the guy. Christopher Hitchens. Read a book by Christopher Hitchens on Kissinger, and he also wrote a book on Bill Clinton, which was not. Even he wrote a book on Mother Teresa, believe it or not. I mean, he was highly critical of a lot of people. But the point is, that's what's happening. So you have these forces happening, and Milton Friedman probably was part of it because they really didn't want that to happen here. So essentially, you've got lots and lots of risks right now piling up on top of each other, and my concern is that could be become an issue. So this week, that's what we're going to do over the next week. We have a couple of items, and I'll fix the audio. But we have lots of interesting topics to be discussed this week. And at 10 o'clock every day, I'll come to you. Obviously, I want to talk about Powell again, having to do with what's going on with. Let me give you the topics. I create them ahead of time because I feel they take quite a bit. So basically, the Fed is under fire. Who's investigating Jerome Powell? The CPI data. I mean, this inflation thing that we're talking about, the inflation data might not be that great. The Trump tariffs. Who's paying those tariffs right now? You're going to be surprised. And of course, the Japan thing. Trump got $550 billion from Japan. Here, spend it. Do whatever you want to do with it. And I think that you should start thinking of looking at what's going on in Europe because the prices are less. In this market that we're in right now, my feeling is that the market is overvalued. And it's not just a feeling, it's actually happening. The market is, in fact, overvalued. I'm checking to make sure I've got the latest here, but yeah, no, it is overvalued. The market is overvalued. And as I said before, there's 6 items that could cause a crash: structural issues, market sentiment, policy, geopolitical, financial stress. Do you think the market will dip again on August 1st? Well, that is what I mean when I'm talking about external shocks or uncertainty. The thing is, the more we talk about August 1st, the more you talk about it, the better you're off. There won't be too many surprises. So August 1st, basically, for those that don't know, is that essentially Trump is basically giving all these countries until August 1st to make a deal. Otherwise, they're going to get 30%. Europe right now, Trump is meeting with Leyen, which is although he doesn't really recognize Europe, but basically the woman that's basically in charge of, not in charge of, but she's representing Europe, and they're going to talk about tariffs. And Europe has basically said that if we don't have a good agreement, we are going to vote in reciprocal tariffs for the U.S. That's not good. Why? Because that means that you're going to have, they're gonna charge the U.S. And of course, Trump is not gonna like that. So instead of being 15%, it's gonna be 50%. So basically, Europe is gonna be closed, and basically, you're going to have a crash on your hands, because now you have a tariff war for sure. Because no one at this point, believe it or not, no one has said boo to Trump. Everyone has agreed to what he wanted to do. Everyone has agreed, said it's fine. I don't want to do anything. I agree with you. I'm going to be paying more tariffs. It's okay. I'm not going to change anything. Which is amazing that no one is actually doing reciprocal tariffs to the U.S. right in the past. Now remember, Europe was paying 1.3%, 1.5% last year. Now they're happy if people don't know wealth. They are happy if they don't get if they get 15%. This is the beauty of what Trump is doing. But he's taking a huge risk, right? He's taking a huge risk by them not charging back reciprocal tariffs. That could be a shock in itself if they all decide to do it. And the reason they would all decide to do it is because they think that they could get away with, and Trump has been weakened. What could weaken Trump? What's going on right now in Washington, D.C. with the assistant district attorney, assistant to the attorney general, to visit a felon, literally 20-year felon in jail, and asking her, what do you really know? This is unprecedented. This is amazing. And Trump didn't want to do that. He didn't want to have a, in there talking to her about that. I mean, because you don't know what's going to come out of that woman's mouth. Suppose she says this and that and this. Of course, the Democrats are salivating, right? They say, great. I mean, it can't get any worse for us. I mean, recently there was I think the Wall Street Journal came out with a survey. I think this is the worst showing for the Democrats. You like them or you don't like them, the point is that people are not impressed. So for them, anything is good. Anything that go after Trump. The only thing is, if you go after Trump, the issue with Trump is literally, amazingly enough, Trump is holding all these risks that I've been talking about: the economy, the stock market, the dollar, the tariffs, Powell, Israel, inflation, Russia, national debt. All that is in his hands, literally, right? And that is a risk that no one is talking about. And you heard it first here. If Trump loses control, meaning loses power for some reason, right? I mean, it's going to be hard to believe that if this guy went to see her in jail and she says, yeah, Trump was there and he did this and he said that. Do you think he's going to say, oh, okay, well, then you could come to the Congress and let's talk about it? That's never going to happen, right? So whatever comes out of her mouth is going to be good. Otherwise, they're not going to want to listen to her, or they're going to say, well, prove it. You can't say that. You can't. And that's the issue. You cannot have all these things happening in the middle of a bubble, because technically speaking, we are overvalued. Why are we overvalued? 3 reasons. First of all, the S&P are now valued by investors at more than 3.3 times their sales, according to Bloomberg data. That's an all-time high. 2, according to Barclays, equity euphoria indicator, a composite of derivative flows, volatility, and sentiment, has surged to twice its normal level, into territory associated in the past with asset bubble. 3, applying the yardstick the investment sage Warren Buffett regards as the best single measure, market valuation to stock market capitalization related to GDP, U.S. equities are at an historic record level. So I don't care what you think, what you like, who you like, where you are, what you want to do. The market is overvalued. What do you do with that information? Well, you watch and you prepare. How do you prepare in a stock market that is overvalued? It's simple. You know what you buy, know what you're buying, and know that you don't know anything. And know that the whole thing could just collapse on Monday morning. You comfortable with that? Are you retiring what? Next week? Sell everything. Sell everything, because everything is overvalued and there are too many risks. I keep talking about these risks all week long, right? And they're all changing. I figured, we're done with the Powell discussion. No, we're not done with the Powell discussion. Why? Because Trump decided to go and visit Powell to lay another, right? I want to remember what he did. He put a piece of paper, say, hey, you got 3.1 billion, not 2.5. The guy said, what are you talking about? No, this is, you're talking about another building. Yeah, it's a building. It's the same thing. Pressure. Okay? And Trump, unfortunately, won't give up. He does not give up. He's like the Terminator. He's not going to stop until this guy is out. And now people that are in the know publicly are saying, yeah, maybe he should leave. The only problem is, and Aaron himself said it, former manager of the largest bond fund ever, said, well, the reason no one is saying anything is because they don't want to say it, because then they're going to appear there for Trump, right? And obviously, you're not going to go on Bloomberg and say that. Timing is everything, creating a bubble then. So right now, a lot of people, like I do, think that he should go. That technically the Fed chair is becoming irrelevant. And frankly, the more they dig, the more stuff they're going to find out. And this is very disturbing. Wait. Forget August 1st, right? Wait until, when is the Fed, when is the next Fed meeting? Let me make sure I give you the correct information here. But I believe, I think it's, when is the next Fed meeting? It is Tuesday, Wednesday. Forget August 1st. The meeting will conclude Wednesday afternoon with a policy and press conference, typically released at 2 p.m. Oh my God. Policymakers are widely expected to leave the federal rate unchanged at 4.25 to 4.5. And economists anticipate a rate cut are more likely in September. This week, you're going to have a dissent at the Fed. You know what a dissent is? When basically they don't agree. When was the last dissent at the Fed. And I don't believe it was not too long ago. I mean, it was a long ago. But anyway, let's double check. The last recorded dissent the Federal Reserve occurred during September 2024 meeting when Michelle Bowman voted against a 50 basis point cut. Now, you do know that September was before the elections, right? Instead, advocating for modest 25% point reduction. What's happening dissent in July 2025? At least one dissent is expected at the upcoming. Governor Whelan has been clear that he made a vote for an immediate rate cut. Bowman supported a modest 25% cut and is aligned for Waller for the upcoming meeting, so making two potential simultaneous dissent. If both dissent, now listen to me, this is extremely important. If both of them dissent, it will be the first time two governors at the same time since when? 1993. That is something that you need to worry about. How is the market going to react to a dissent? Two governors. The man, forget the building that's a mess. Now he's got a mess within his own team of Federal Reserve. That could be a problem. Two, not just one, two Fed chair at the same time. Not Fed chair, Fed governor are going to say, we don't agree with the Fed. We should decrease the rates. That's going to create uncertainty, unfortunately, into the market. That's going to create a tremendous amount of uncertainty. And I don't know if you want that, but you may get it. You may get it, and you may get what you finally wanted to have. You have it. You have dissent. So that could be a problem, especially, and that could fall under these categories that I've been talking about, which is basically policy or central bank action, monetary tightening, rapid interest rate hikes, fiscal shocks. That could fall under category 4, that there's uncertainty at the Fed, right? Meaning that why is he not lowering the rates? Because I think that there's going to be inflation and Trump is wrong what he did, and I don't like him. And you know, I mean, who knows what he's really I don't think that Trump is his best friend right now, that's for sure. I don't think he could stand the guy right now, and I think that's seen. So when you have that type of uncertainty, that is a problem. So when we talk about the boom, the AI boom, and the dot-com bubble, is it the same thing? Well, yeah, Trump, Mike says that Trump wants the rates lowered, and Mike is correct. Should they be lowered? Well, two of the governors who work with the Fed says yes. In fact, I am going to dissent. First time since 1993. So let's recoup here. You've got the Fed house in disarray. First, they're spending a tremendous amount of money on something that, frankly, is too expensive, that building. But, I mean, it's a building, who cares? But obviously, you're not controlling that. 2, you're going to have dissent. 3, you've got the president on your heels with the Treasury Secretary. 4, you have made mistakes in the past and you've admitted. I'm sorry. Powell admitted mistakes. He says that that the last year it was having to do with Powell has conceded. This is, has conceded that the Fed was too slow to respond to rising inflation in 2021. Obviously, who was in charge in 2021? Okay, the Democrats. Okay, and it seems that Powell having issues. If interest rates of homes can be lowered for flat, the housing market will explode. Yes, that's inflation right there for you. Be careful. Powell has admitted that the Fed was too slow to respond to rising inflation in 2021, acknowledging that the central bank underestimated how long elevated prices would persist and move too cautiously. or you didn't want to upset the Democrats and Biden and keeping rates by raising rates. You were a little too slow there. And yet, when Kamala was about to become president, you lower rates. They all know what's going on here. They know exactly. At the Senate hearing, he further admitted, he himself, I'm not saying that, he's saying himself, that the pledge to delay raising rates until labor market fully healed was a misstep, suggesting the Fed should have lifted rates earlier rather than waiting for full employment. Why did you wait? You didn't know? Were you pressured? Powell also acknowledged the standard inflation forecasting models have performed poorly. Why do you think Bassett is after this guy? If I kind of have the feeling, and maybe you now have a feeling that this is kind of strange, why the analyst sees these admissions as meaningful? Well, praise Powell's willingness to admit mistakes, citing humility and flexibility. See how you could turn something, well, at least he said he did it. Quality seen as crucial for steady leadership. Oh, okay. So it's a good thing then that you made a mistake, because you admitted making a mistake. You see what I mean? And this is why it's dangerous. It's very dangerous because you having a Fed that is weakened. And that's why, the people that are in the know say he's got to go. He has got to go. And if he doesn't go, and we'll see. Both sides have similarities, but they're not exactly the same. Yeah, I mean, we'll see. We'll see on August 1st what happened. I'm sorry, in July, Tuesday and Wednesday. You're going to find out Tuesday and Wednesday. I'm going to have to do a special live to see. We're going to be live to see what he's saying, and you're going to realize that, oh my God, what is he saying? He's going to actually. There's going to be a descent at the Fed. How is the market going to react? And then what is he going to say? And you could imagine the questions that he's going to get. Okay? The pressure on him right now, the Fed chairman needs to go if he does not lower the rates. Right? I mean, if Mike is saying that, you could imagine the voices in Powell's head right now. Of course, this relates directly to the dot-com bubble and the AI boom. Why? Because if it's not done smoothly, the market will boom. Well, yes, if he lowers the rate, but imagine if he actually does this. Imagine on Wednesday he lowers the rates. They're going to say he's got no backbone. He could be bought. He has lost all credibility. Whichever one he goes, it is no good for Powell. Now, how did he get into this situation? Well, he underestimated Trump. He underestimated the man's ability to keep at it. And you should have seen when he got shot the first time, he got up and, let's not relive that moment. But the point is, you have to be careful. And unfortunately, these are the things that could create market crashes. Because if he doesn't lower rates, that's going to hype up more. If he lowers rates, that's not, whatever happened is not going to be good at the end of the day. The only thing that he can do, he's going to say, I am resigning. So at least there's going to be a huge sign of relief. Trump is going to lay off. I guess Bassett is going to be it, because I think it's either Bassett wins if he quits, or Whelan wins if there's dissent at the Fed. The first dissent to governor since 1993, right? The rates are killing consumers' confidence and on the housing market. Well, I mean, obviously, right? I mean, it's keeping rates the housing is suffering right now, right? It's suffering. Where are you going to buy a house with 8%, 7% 30-year treasury? That's too much. That's too much. We don't want to do that. What we want to do is we want peace and quiet, at least at that level, because, the economy, peace and quiet, good. Stock market, overvalued. The dollar, under attack. Tariffs. Nobody's messing around with Trump right now. That's a good thing. They're just paying and saying thank you. Maybe the Europeans are going to do something. Got to be careful. The tariffs, great. Powell out or not. So if he doesn't go out and he stays in and he wants him out and he doesn't want the lower rates and the market expects lower rates, this back and forth is buyers are walking away from the table and sellers aren't moving up the prices. Yes. Yes. Because you want your money. You don't want to lose money. The first sign in housing, right, is when house prices start to go down. That is not a good sign. Because they tell you that the best investment is in your house. If your house value goes down, that is not good. Okay. Iran. That Israel out of control. There was an article in the Wall Street Journal that Israel is out of control. Okay. They just erase and they will change for the positive. Yeah, well, that's what we're waiting for. But so that's Israel. China, just a matter of time. Just a matter of time before they get into Taiwan. At some point, they will. Why? Because there's deflation in China and nobody's buying their products. And Trump is not making it easy by overcharging them and not buying everything that he wants. So they're holding off on the purchase of the rare minerals because they're going to make weapons. Why am I going to give you stuff that you're going to make weapons to send it against me anyway? Right? So you got that going, and then you obviously have the inflation, which is a big topic. I mean, right now it's under control, but let's see what happens. And then, of course, Russia is Russia, and then the national debt, not a big issue right now. The point is that you've got lots of items on the plate right now for everyone to worry about. And this week alone, you're going to hear back from Epstein and what's her name? Ghislaine Maxwell. What did she decide? What's she going to do? What's going to happen? What is the next step? Right? What's the next step? So she made a deal. There is no free market. No, of course not. I mean, technically, if you believe financial theory, the market is efficient. Everything is reflected in the market right now. All the risks. Not so sure. Not so sure if all the risks are reflected in the market right now. So this week you're going to hear about Epstein, more about Ghislaine Maxwell, because the assistant district attorney general is going to come back and say, okay, we had a meeting, we talked, and we want to hear what she has to say. That's not good. And then second, you need to hear what happened with the Fed in July, at the end of July. What is he going to do? Is he going to lower the rates? Well, if he lowers the rates, that's not good. Why? Because he's being influenced. Okay. He's going to raise the rate. Well, then he has dissent. So he can't keep his house in order. Whichever one happened, it's not going to be good. The only thing, and this is what Ann Iron was saying in a recent BBC interview, CNBC said he's got to go. Of course, the interviewer was upset. He said, what do you mean you want him out? Are you sure? You're a respectable figure of the financial community. You're saying that the Fed should go. Why? He didn't do anything wrong. Well, I know he got a few things wrong, and I just told you, right? The Fed admitted that in 2021, he should have raised the rates sooner. You could imagine when he was talking to the Democrats at that time, they said, no, don't do that. I mean, can't you keep it a little longer? I said, I don't know if I could keep it any lower because this is not the right time for us, right? I mean, the inflation is coming. And he says, well, I made a mistake. Was he influenced? He wasn't influenced. Okay. Then in 2024, just before what's her name gets elected, he lowers the rates. Okay. I guess Trump brought it up, so I guess he raised the rates just in September. And now that you have no inflation, like it or not, and he's not lowering the rates, it's becoming a little difficult to say that you're totally impartial. And now, even worse, you're going to have dissent. Now, these are the supposedly people that are supposed to be impartial, all of them. 7 governors and 5 presidents, right? And the Fed chair. These people are supposed to look at it like economists, right? Not like us, who probably don't know anything. People that understand what's happening, and they say, no, we are very serious about it. We're not influenced by political party, whatever. So we do not want to change it. So we're going to keep it. No, we're split. So there is a case that could be made for lower rates then. So why are you not doing it? So you couple that with what he did in 2024 by lowering the rates, and 2021 by not raising the rates. You put it all together and you're saying, what are you doing? And then, of course, the cherry on top of the cake is the building that is out of control. Oh, student loan repayments, yes. And that is a huge mess right there. That is a huge mess. There's trillions of dollars once you get the government to pay for things, people don't value it and they just use it, and now they don't need it, and now they can't repay it. So that could be like a housing things as we know it. So the bottom line is this: in terms of stock market, you got to be very careful what you're investing into. If you're gonna, because you don't, there's the FOMO, the fear of missing out. You don't want FOMO. You don't want FOMO, right? So what you want to do is then you want to get involved in buying stuff that is cheap. And that's what I said and don't forget to subscribe to the channel. But basically what I'm saying is that you should be buying stocks that are cheap. Don't go after NVIDIA. That boat has sailed for you. It's over, because now you're basically waiting for the shoe to drop in the stock market because it's overvalued. You're waiting for it to collapse. You're waiting for the crash. I'm not saying there's going to be a crash. What I'm saying is that there are lots of elements built up in the system. These are the risks that I'm going to be talking over and over, and they change all the time to evaluate, because that's how you do, to basically understand what's happening. I want my subscribers to understand the risks. And it's not easy. There's lots of them, right? But you need, because it impacts the stock market. It impacts your job, right? Because right now, one topic I'm going to be talking about is the CPI numbers. Who cares? You do care, because the number itself is not reliable anymore. So I'm not even talking about the fact that the Fed might not be reliable. Now the CPI number is not reliable, meaning that you don't know what it's saying. It may tell you that CPI is low when in fact it's high. Now, one number that you should be looking at, and you could go anytime, something called trueflation, which is a different way of looking at inflation. And trueflation right now is basically saying that since in July 10th, it was at 1.66. Now it's at 2.06. And frankly, inflation, looking from April, which was 1.2, and now it's 2. So basically, inflation is going up. You may not see it yet, but in ups and drags, it's not the inflation of December, which was 3.11, has come down quite a bit. And it's not, inflation has come down from the highest level. So we have inflation, yes. We're breathing. Are we breathing too fast and too much? I don't know. We have inflation, that is for sure. And it's going up, yes, but it's still not what we had in December. So let's not panic, but we have inflation. But when you look at the numbers from the Fed, they may rely on the wrong number. So if they think that there is inflation, so they're not going to do anything. But it's still very low, and you may be killing. You may be, like this guy was talking about the housing, right? Housing is important. Why? Because you're spending a lot of money building housing, pulling concrete, cutting wood. That's a big production of activity. So you say, well, we don't want to do that anymore. Okay, well. Can we buy cars? No, that's almost 6% interest rate, unless you buy a Tesla right now for 3.5%. Then again, nobody wants to buy Tesla. So you know what I mean? So all this stuff is gonna come and haunt you back and hurt you. And you have to be careful. You have to be very careful because all the elements are there. When are they going to hit? I don't know. But they are going to hit at some point because at some point, one of those things is going to go sideways. There is no way. Let's put it this way. Out of all the 10 risks that I have, right? If I say that maybe the odds of one of them is 20% and 30%, whatever, all you need is one of them. No. All of them happening at the same time, very unlikely. But one of them, I mean, anything could happen this week. This week, August 1st, you've got the tariffs. There, you could have Europe says, you know what? No, forget him. I'm not paying 20%. Send the reciprocal tariffs. Oh, Europe sent the reciprocal tariff, and they got 15%. So it is working. Well, let's fight back against Trump. Then Trump loses that battle, right? Or they get 15% and they go away and everything is fine. I don't know. Right now, it would appear that no one wants to mess around with Trump. But the reason they don't want to mess around with Trump because he's got no one in the U.S. to say no. The Democrats are lost all credibility, and the Republicans are 100% behind him. Okay, so what can they do? There's nothing they can do right now. But be careful. Because the Ghislaine Maxwell thing, if that becomes an issue, that will become a very big issue for Trump, and he's not going to like that. What do I mean by that? He said he's going to lose the power. He's going to lose the ability to do the thing that he's doing right now. And then if he loses control, that is a risk, and that's why it's one of my risks, which I call the Trump administration is in turmoil, because if it's in turmoil, then Trump is in turmoil. And if Trump is in turmoil, he has no control, then everybody says the king is weak. Now, let me tell you, if Powell quits, that's going to make Trump even more powerful because they're going to say, oh my God, he's able to do it. He was able to get the Fed to quit. Now, of course, the Fed itself, did certain things that he admitted were wrong, and that's not good either. The thing with the race, he himself, check it out. He said himself. So it's not like Trump made him do it. Trump just pointed out that you are not so good after all. It is time for you to go. So the guy left. I like the basement wall better. You mean the basement wall? Let's get straight to it, because that's what we're hitting. We might be hitting a wall pretty soon, right? And that could be a problem. I'm always concerned about that. I'm always concerned that who should pay for the students? Me. Yeah, you're going to pay for it. Buster Heyman. I like it as well. So that is the thing. Pray for Palestine. I mean that, and there was an article in the Wall Street Journal recently yesterday that basically says that, and this is one of my risks. This is risk number 6, Iran versus Israel. That basically Israel is out of control. Israel is out of control, and unfortunately, they think that they are not going to be able to sustain that level of activity. They think that Trump is not controlling Israel, and Israel needs to be controlled. Control meaning that you can't keep sending missiles to Israel. There's not enough to go around anymore. There is not enough missiles to go around to furnish Israel, and that's a problem. And what they've shown is that basically Trump, I don't see the Maxwell thing, anything involving Trump. I think they'll cut a deal with her early release. Well, obviously she wants to get out. She's saying, I had nothing to do with this. I mean, I was there. I had a good time. I didn't realize that, that's what I was doing. I mean, I don't know. Let's make a deal. Maybe the deal is, and I think I talked about that before, and I said, these are the 4 possibilities with Maxwell. I think it probably makes sense for me to talk about it. I think the Trump administration, yeah, these are the things that could happen with. So there's four things that could happen. The first one is you have a symbolic corporation with limited disclosure, which is kind of what's happening now. She testified privately before Congress via deposition. Now, this is important to talk about this because this could be a chalk in Trump's armor. So let's be careful. But basically, this is what could be happening. Maxwell testified the DOJ provides more redacted record, but refused to unseal the full quote-unquote client list, citing national security. And the outcome is politically useful, but some but legally limited. And so everybody gets a partial answer, and case fades, and Trump is okay, and we move on. Case number two, explosive testimony, naming high-profile individuals. Under pressure of a deal, Maxwell names names, powerful individuals connected to Epstein operation, and the DOJ may refer new investigation and unseal the grand jury, although this has never done. I mean, very unusual that they release but it's possible and could result in resignation, indictment. That could be a massive public and media reaction. That would be unlikely, right? Because if there's anything like that, they're going to say, well, you don't want to know what she has to say. And of course, the Democrats are going to say, aha, you're hiding. Choice number three, the DOJ of the White House blocked testimony completely, which is kind of what they've been doing. They've been saying, you know what, I don't want to talk about it. And they say, no, you can't say that. You have to talk about it. And then number four, quiet stalemate, no major fallout. Maxwell testimony yields little new information. They give her, I don't know, a better room or whatever, and she goes away. The likelihood is we just need to let some steam out. The steam comes out, and nothing happens. Unless, but think of it this way. If she had something to say right now, right, and she's talking to a Trump appointee, literally, they're not going to let her talk, right? She's a Trump appointee. They're not going to tell her, say, yeah, Trump was there. You know, wow, I had a great time. You know, that's never going to happen. They're not going to let that happen. So I think at the end of the day, they just want to hear what she has to say. They just want to talk about it and basically have a discussion. But that's it. That's what's going to happen here. So I don't think anything is going to come off of it. Otherwise, you would have heard it by now. Because the same way, Congress basically went home. They went home. They said, you know what, can we stop talking about this? Because I don't want to talk about it. So they won't talk about it. So as far as the market is concerned on Monday morning, we should be okay. On Tuesday, be careful. On Wednesday, be very careful, because August 1st, you've got Tuesday, you've got that. And then, so this week, you have to be very careful. So be careful what happens this week, because it could be a doozy. Okay. And we'll talk about all these issues over the week. And I will see you tomorrow at 10 o'clock.